Hello, I'm Mike McKee with Living Right Real Estate. Today we're going to talk a little bit about pre-qualifying for loans. Part of our pre-qualifying is how much home can I afford? That's usually a general question. And then again, what is the best type of financing for the purchase that I'm about to do? Different types of loans on the market, there are quite a few. The reasons for your loans might be a primary residence, maybe a second home, maybe an investor property, and then you also have some construction perms for those that want to build. The loan products can range in variety from conforming conventional loans, which meet Fannie and Freddie guidelines. You also have VA loans for veterans, FHA loans, USDA programs, which include some bond money, first-time home buyer programs, along with down payment assistance. We may look also into jumbo loans for the larger purchases. The other type of loans, most of those are going to be conforming loans. The other type of loans are non-conforming loans or portfolio loans, and also subprime loans, which we'll touch base on those later. As far as qualifications, in general qualifications, you need to have a general idea of your credit score. Credit scores range generally between 500 and 900 as far as the point scale, and obviously the higher number the better. It also works into your rates and the type of mortgages that you may apply for. To know that is some good valuable information for you. What can I qualify for? That comes from your gross income. Basically, you take your gross income for the year, divide it by 12, give your monthly gross income, and generally speaking, your housing allowance can be up to 28% of that number. That will also be a good way for you to check with amortization of seeing what kind of price range that you may qualify for on housing allowance. As far as your other total debt usually runs to be about 36%, ideally. Anything that more than that can be handled in certain situations with very good credit, extra reserves, and also assets. On that high side, that could go to between 40 and 45%, and as high as 50% on certain programs. What's including in your debt? The biggest one is, generally speaking, is probably car payments. Other than car payments, you usually have your monthly credit card payments and other installment loans. Those are the items that would add to your housing allowance for your total debt ratio. When we get ready to go get our loan, we're shopping for money. You need to look for the best deal you can for your money. In this, I would recommend talking to at least 2 to 3 lenders minimum, and to make sure that we're on the same page of comparing apples to apples in the type of loan that you're going to look for. I recommend you asking for a 0-0 loan, which would be no origination fee and no discount points. If you get their rate at that, you will be able to compare apples to apples and see who has the best rates. You also want to ask the lender as far as their fees, what fees they charge, as far as their total bank fees, their again origination fees and discount points. And then you also, if PMI is required, which is private mortgage insurance on your loan, you may want to figure in those costs also. Definitely go out and get a pre-qual letter before you start looking. It'll be that much more ammunition for you when you get ready to purchase your home. I'd be glad to help you with anything in the future. You can call me at 850-585-5461. Again, Mike McKee with Living Right Real Estate.